Hello traders, Gary Wagner here. It is about 12:13 in Honolulu, 6:13 in New York on Thursday, first day of December 2022, and this is the daily report for gold and silver. This was a phenomenal day for the precious metals, with both gold and silver gaining tremendous value. Gold, for example, gained 3.27% or $57.50, with the most active February contract now fixed over $1,800 at $1,817.40. It was aided by dollar weakness. However, dollar weakness only accounted for roughly a third, but the dollar dropped by 1.17%, with the dollar index currently at 104.66. But the big star today, March silver, gaining a tremendous amount, 5.46%. That's about $1.19 if we round that up, with the most active contract now valued at $22.97 after trading to a high just above $23. Truly a historical day. Traders, I want to begin today's video report with what I believe is the elephant in the room that nobody noticed was there. And that is the discrepancy, the difference between how much spot or physical gold moved up when compared to how much gold futures moved higher. Spot gold had a huge gain, $34.30, but that is dwarfed by the fact that gold futures moved up $57. What that tells me is not that physical buyers were less active in the market as much as the following. First, there had to be massive short covering by major funds that were short gold. They probably ran stops just above $1,800 per ounce. And the second thing is a lot of major players did initiate long positions over the last 2 days, specifically on the open in New York. And that would account for why we had gold moving up $57 in futures and only $34 in spot. Now, another change that did is when we looked at the difference between gold futures gain, which was about 3.25%, and the drop in the dollar, which was 1.17%. That shows you that the vast majority of the net change in futures was buyers entering the market or short covering, which requires that you buy to short cover. Whereas when we look at this Kitco Gold Index, it clearly shows us that dollar weakness accounted for the vast majority of the net change in spot gold. That being said, gains in both futures and spot gold were tremendous. This first chart that we're looking at is our long-term view containing a year full of data for gold futures, the continuous contract. We've talked about the fact that the former high was the first occurrence of a higher high since March. We can definitely say with confidence now that we have seen the first higher low. That occurred last week when gold traded to a low of $17.19 intraday. And today, the fact that we've taken out that former high, we've gotten our second higher high since March. And that, my friends, strengthens our belief that we have begun a major rally that began on the third day of November, and I believe will continue not only throughout the end of this year, but into the first quarter of next year. That being said, although gold has moved in a near parabolic manner, and the reason I say that is we get this really parabolic move up, but we did get a correction. The correction itself was about to the 23% retracement point, and then a return to rally mode. Even though I think that we are in a large bull cycle, there will be ebbs and flows, peaks or valleys, and the most logical spot to see if gold finds resistance, and I believe it's likely but not guaranteed, is this previous high here at $1,824. We're absolutely within striking distance, but we'll have to see how gold prices unfold over this last month of 2022. Regardless of where gold goes through the end of this year as well as next year, one thing is clear. Since November 3rd, we have gained about 11% per ounce in gold, a tremendous gain in one single month. When we consider that and we look at the fact that we are probably in our third impulse wave in terms of our current Elliott wave count, which we will go through next week, we definitely believe that it is reasonable to assume that at least, at minimum, by the end of 2023, gold will in fact have a new all-time record high. Because of the length of this show, we didn't cover silver. We will do that in detail next week and cover it briefly tomorrow. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.